welcome back to my weekly recaps. This is Franz. Let's take a look again at what markets have been doing in the last 3 weeks. That's when we last saw each other. Here is the S&P, and this blue line marks the point where all our longs were exited, and this is the place where we went out of this huge uptrend. You can see it here. The black lines indicated at those points are long position entries, and the blue line are the exit for all of them. 3 weeks ago I said that you could be pretty unhappy, you could be pretty sad, you could be pissed that the market comes back in such a rapid fashion, and it doesn't give you really the time to look for, or the market doesn't give itself time to establish a smooth trend exit, but it comes back so quickly, so fast, that you're just stopping out with the stop that you're trailing behind the market to secure some profits. Usually we want to take the fractal inside the balance zone for a stop out, but since it's so low here at the blue line, our stop trailed behind the market has been hit first. Usually we would like to see a fractal like this in the upper area of the balance zone, and then we easily stop out as the market breaks fractals into the opposite direction. That simply means that you have breakouts being formed in the opposite direction and they are being taken. That is not a characteristic of a continuing uptrend as you move from higher low, higher low, higher low, higher low, and so on, higher lows, to lower lows, lower lows, lower lows. Okay, that's important. This is what happened here now in the S&P, and after we have come down so far into the balance zone, we now are bouncing off of it. The previous 2 weeks here, the green ones, looked like market might not even have that big of a problem to move out to the upside again, but you have to remember that the market wants to come back to the balance zone. This is what I've always been saying. The market wants to come back to the balance zone. It wants to trade where its natural state would be, without too much of incoming information or being manipulated or whatever. And that is exactly in between those moving averages. We can see that the market is finding that zone now again, and it might be months, maybe even until the end of 2018, until this market will give us some sort of an info where it can go next. Right now we are seeing momentum drop, and it's unclear whether this market needs to see momentum below the zero line, which would make price come down. I'm not going to give you a price target, I'm just saying it needs to come down further. It could hit previous fractal areas, who knows. It could also just move for a very long time in a sideways manner, so that the momentum can go below the zero line. If it does that, what that would give you is a major type of a correction, and this major correction is necessary for the market to have breathed enough in order for it to establish a completely new trend in the new or in the opposite direction. Exactly what we have seen in here, for example, that is 2015-2016. The trend had come up, and now the market needs to go clearly below the balance zone. The market's momentum needs to be clearly below the zero line one time, and here yet another time, and it's only after that that you see moves really profitable to the upside again. And we might have entered a state like this here in the S&P. Who knows? We don't know. Right now all we know is that we are trading sideways. We are out of our long positions. That seemed to be the right decision so far, and we're waiting for the market to give us a new signal for wherever it wants to go. If we take a look at the monthly chart, we can see that momentum is still at its high and price is still clearly above the balance zone. So we are in an uptrend here. Should the market just keep on going and hit new highs, we will simply be buying on the weekly chart. However, on the trading time frame, the weekly, the market made us exit. When we take a look at another couple of markets, we are looking at the DAX index here. Very interesting in the DAX. I was talking about this as well 3 weeks ago. We exited longs, and we are very quick here. we are already looking at fractals in the opposite direction being broken. This week it already broke. You have your fractal being formed in the last 3 weeks when we weren't talking, and this week we break the fractal. When we take a look at the monthly chart, we can see that we are much further into the correction mode than we were in the S&Ps. In the S&Ps, price is above the balance zone. Here we're already breaching the middle part, the center zone of it. We might reach the blue line, it might go lower, it might reach the blue line, correct, and then go lower. It might do none of these things. Who knows? Fact is, breakouts are being taken in the other direction. Uptrend is done very clearly here in the German index. There are a couple of other European indexes that are interesting because they look like they might be further along when it comes to downside movements. We have here the Spanish IBEX 35. There is a self-fractal at this area well below the balance zone. If it's taken, it might actually be worth something, especially since we are already out of the balance zone to the downside on the monthly chart in this market. Sell order is in. Let's see what it's going to do. Risk management in place, very important. The Euro stocks is also very interesting in regard to the fact that, let me just check where it is. Okay, I'm being a little bit ridiculous here right now. There it is. When you take a look at this monthly chart in the Euro stocks, we are in the balance zone. We are trading out of the balance zone here. And if this continues further down, we might actually have a chance for this to move quite a bit to the downside, maybe even established a trend to the downside. So Europe in its index, as well as with a couple of individual stocks in individual countries, seems to be heading down, or at least into a further correction mode. We have UK 100 right there, fractal formed. If that's taken, we might move to the downside. Definitely have a short going on here as well, especially as we are at the lower end of the balance zone. Please remember that as long as price is trading in the balance zone, the price can really go either way. We have no idea where it's going to move, but you just got to be ready for it. So we are seeing some sort of shift here in the indice markets. It looks like we might be in very early when we take shorts. We are taking them only in European markets, not in American markets. So very limited risk, not too many trades and too many indices here in Europe, but we definitely want to take a look at if this downside can get going with a small position. Being pissed off, being a little bit sad about ending uptrends, and of course uptrends are always good for the economy itself. Even if it's all a farce, you know that people are going to be doing relatively good in their real lives compared to a 50, 60, 70% correction in some sort of a stock market anywhere in the world. We are now looking at opportunities here in our trading to possibly take some trends to the short side. We don't really know right now if that's really going to unfold or if we are going to be trapped in some annoying situation. But situations can change pretty quickly. Even on this long-term time frame trading, there are changes within 1 week, 2 weeks, 3 weeks, or a month where we just see the markets shifting and giving us new opportunities. And as long as we are awake and as long as we are able to go with the flow, we are able to take advantage of that. And even if we are wrong, the risk management is going to take care of us, and we will just follow along such a long time until the market is able to prove itself to have established a new direction. And this direction is then just what we will stick with and where we are going to add on. Let's take a look at some forex pairs here. US dollar yen. Very nice one actually. I've been marking breakouts for you. We have taken them. I've announced this on Twitter on the spot when it was actually happening. And look at where this week is closing. We've made new lows, and this thing is most likely going to hit somewhere in here, 100 or below 100. Let's see, maybe it can even come lower, who knows. Overall time frame in the US dollar yen is also below the balance zone, and that's why we want to be short. And that's really all we care about. We don't have any price targets. We just let it run. We will move the stop behind the market. We have two shorts going on, this one here at the black line, this one here at the black line, and we will let it run as long as it wants to keep on going. We have a couple of other positions that really didn't look so good in the last couple of weeks, and even at the beginning of this week. Here, for example, we have a euro dollar position. Finally, we have price turning on the green line, maybe heading up, who knows. We need to establish some momentum. You had a long opportunity with this fractal, another long opportunity with that fractal. Right after your entry, you have 5 weeks of nothing, and now hopefully we are bouncing off the green line, establishing some new upside momentum. Right now we are creating a divergence in the momentum indicator. Price would really have to be getting going now, clearly getting going, for the market to establish a new trend to the upside with momentum making new highs also. So we are holding this. Let's see if it's going to be successful. A market we've never been talking about, as far as I remember, in all of my weekly recaps, is the Euro-British Pound. Euro-British Pound overall time frame is very easy. We have an uptrend here, we have a correction of this uptrend, and we are now assuming that this move that has already been going on the monthly for quite a while, we are talking December 2015, is probably trying to be continued, and we are hitting new highs on this monthly time frame above the old high here at 0.98. As the monthly has bounced off the green line, we are looking at our trading time frame, the weekly, and oh look, we have fractals here that can be taken to the upside. Momentum is below the zero line in this correction. We have this whole uptrend going on, and always when the momentum is going back into the opposite direction, that means below the zero line in an uptrend, what you have is a major type of correction, and that would show you that the next move is very likely, it doesn't have to be, but it's very likely to be a longer type of a move, a longer type of leg, where a lot of internal moves have to be completed. These fractals here give us entry options. This would be your first one, and if you are a little bit more conservative, you can wait for those ones to be hit into the trend direction. As we've seen on the monthly, this is where we're traveling, we're bouncing off the balance zone and maybe heading out to the upside. So a low risk position is taken in this chart as well. US dollar Canadian also with a new opportunity. Let's take a look here. Getting this stuff removed. We have an uptrend going on, a correction. This correction went into the direction of the previous trend, which is upwards here. It bounces off the red line, it moves up. There's a fractal. The fractal is broken at this point, and you would assume that the trend is continued and goes higher, but that's not the case. In a correction, many times you get 3 types of moves. The Elliott wave guys would say you get A, B, C, and this might be A, this might be B, and this might be C, even though we don't count waves, we just follow the price. And what the price is saying, that here we went long and we failed. The market went down, but look at this candle right here. This is a pin bar or a divergent bar occurring exactly on the level where your previous correction ended. And now the market has failed to go lower than that. That supports the scenario that all of this is just a correction. We were originally right to try and trade it back for the continuation of the previous trend. Thing is just that here we were too soon to do that. Right now we are in an overall situation where we are in the balance zone, but we are continuing a move that started down here. You have somewhat of an initial move up, a correction, but you don't go lower than here, and then the trend might continue. You even have a fractal inside the balance zone, which is simply a breakout measure to take the market long. And this is what you see in a little bit more detail on the weekly, and this is where we trade that thing. This line here is our major breakout line, and we have a long position in here. It's not triggered yet, but we're waiting for it to be hit, and our stop is right below the balance zone for this long. Again, this candle formation here makes up the monthly divergent or pin bar, sends the price higher. This initial move is corrected, and it doesn't make a new low below here to the left, and now we break those initial highs, and that would send a price higher, as this is a classic kind of a breakout. So US dollar Canadian for me is a long position. For the final part, let's take a look at gold and silver. We are looking at an overall situation. Let me just recap this quickly. Uptrend, correction, initial move to the other side of the balance zone, correction, just like we saw, not going lower than over here, and now we are waiting for this to come out and break those fractals up there. We're waiting really for that opportunity to get long, and I am long already, which was quite soon. We have seen price spiking into the area of the previous fractal, and that's where I bought. But look at what price has been doing in the last 6 weeks here. Nothing. This week it went even as far down as the red line. It was just about to stop me out, but then turned around and closes above the green line. We'll see if that's enough for momentum to build and send this thing higher, but right now I'm not that happy with those positions, but risk management takes care of that unhappiness, as it will just get me out before I lose too much. And that's the case here as well. We do like these bounces of the balance zone, but still we can't be entirely sure yet. We really need to see volume going. We really need to see some momentum coming in gold, and we'll see the same thing in silver right now in order for that to have some faith to go to the upside. Now silver looks really messy here. The fat black line marks my entry. It has been really bad ever since I bought. My stop is right below here. I bought it here. My stop is right there. I was very early in this one. Let's see if it can hold. I have actually moved up my stop below this week because I want to stop out if we go lower than this week. Simply because we are below the balance zone, and this breakout has not even started to happen. Look at silver and on this kind of a time frame. On the monthly chart, look at these last couple of months here, 8 months or 10 months. This is nothing at all has happened here. There is just this 1 month with this huge wick, and this wick is rejecting this low area. It didn't even go as low as it was here, just bounced off of it. I guess some people would call it, well, close to a double bottom or something. But anyhow, nothing at all happening in silver here. We are exactly on top of the balance zone. That could really someday lead to an explosive kind of a move, and it will very likely be to the upside, as the market rejected this very low area. We just got to be there. We don't know when it's going to happen, and that's why we need so much patience when it comes to trading. All right. Quite a couple of shifts in Forex and indices in metal markets. We gotta wait how this 2018 unfolds. We want to stay flexible in our mind. We do not want to be passive and get stuck in emotions, maybe from a couple of weeks ago where the indice longs were stopped out and we didn't really know what's going to be there next. And it's always difficult to cope with feelings that well, that don't support the money making mode. You know, you want to make money. That's why you're here. If you can't make money, or you don't see yourself making money, that's a bad sign, you think. But cash also is a position. Maybe you've heard this before. Cash is a position. That means when you are in cash and you do not have a position going, not a long, not a short or anything, that simply is an argument for you that you know what you're doing, you know there is no opportunity, you're making sure you're not losing money senselessly, because that's what we in the end cannot afford, or we don't want to lose more than we have to, and we already are losing money in in trend shifts where we are trying out new breakouts, or when a breakout didn't work. And we don't want to waste money by taking positions that we shouldn't be taking, or by not taking positions that we should be taking. And therefore we have our system, and we don't want to get stuck, as I said, in thoughts or with emotions. We want to trade the system, and the market tells us through the system what we should be doing. And it doesn't matter if we like it or not, or if we agree with it or not, or if we think it's too fast, changing signals or changing markets. We should just unquestionably be doing what the market tells us with appropriate risk management. If we can pull that off with the appropriate risk management, then over the long term, and I'm really talking long term, we're talking, years. In the end, we're talking decades, we're talking 10 years, 20 years, maybe we're talking 30 years. 30 years that you will be involved with this, where you are making it a long way, you're making it a long way, in the sense that the amount of money, because that's what it boils down to, that the amount of money has significantly increased. But it's not going to do that inside of 1 week, or if you're a day trader, you think you can become rich within a day or something like this. It's ridiculous to think that, even though that's what you're being told in the media. You should absolutely have that patience, and by trading long term, and this is always what I enjoy about long term, the trends are running for quite a while, and the add-ons positions, or the add-on signals that you get, are pretty safe, in the sense that if everything is aligned, if the trend is stable, if you really have let it go, like we saw it in the S&P and so on and so forth, you have quite a good basis for adding on, and adding on in a sense that you're not adding on with 0.5%, but you're actually able to go a little bit more, and you're actually able to push it a little bit, and to really increase some account size there, because I'm guessing that there are not a lot of people listening here who have $1 million account. I guess we are looking at people who have a $5,000 account, or a $10,000 account, or maybe a $50,000 account. But you all want to get to that point where you're independent, doing what you do. If you want to reach that level, you gotta push it. Nobody ever became successful by being boring. You gotta be pushing it a little bit, but you gotta develop this experience, that when you can push it a little bit. And for me, this is absolutely the long-term time frames, with very precise add-on signals in a trend, and then really taking it out of the market, like we did in the S&P, like we did in the Nikkei. And those were quite some crazy gains. If you take a look at my performance page, you'll see a 200% gain there. Not saying that I'm producing this every year. Markets have to be there. It has to go well. But putting on a big position with long-term trading is much easier than doing it on a 5-minute, or even on an hour or 4-hour chart. Plus, the market's going to travel much more and much longer, and you're just taking one trade. You're not entering and exiting all the time, like on a 1 or 4-hour chart. And therefore, with just a little bit of patience, you are going to get where you need to. And that's how you change your life with this kind of stuff. You're not just making a living off of it. All right, now that's a little bit of ramble here at the end. Let's see if all these switches in markets, or these changes that we're seeing, are ending up in something useful for us. Until then, enjoy your weekend, and enjoy market action. Next week, I talk to you soon.